Welcome to Making Money. This is Matt McCall. Thanks for joining me today, the first day of March. Right around the corner of the Ides of March. But, in like a lion, out like a lamb. Isn't that what they say about the month of March? We'll see what happens here with the market. We have obviously a little bit of update what's going on overseas, Ukraine, Russia conflict. We're going to talk about Bitcoin, big rally last couple of days when everybody thought the rally was over. We have oil hitting an 8-year high above $100 a barrel. We're going to talk about Bitcoin mining companies. So much going on right now, such opportunity out there. When there's crisis, there's opportunity, folks. All that and more coming up right now on Making Money. Again, folks, thanks for joining me. This is Matt McCall. It is the first day of March. The year is flying by, isn't it? And I got to tell you, it's been a wild year so far in just 2 months. The short month of February, January was crazy. Market was down big. Then, of course, we had the invasion of Russia into Ukraine just last week, which has led to extremely volatile markets. So let's take a look here at the S&P 500, kind of give you guys an idea where we're at. We're about an hour into trading here on Tuesday morning. And we have the S&P down about 0.5%. So all things considered, not that bad. It is on the low of the session, though. It was up at one point today a little bit, but down about 23 points at 43.50 right now. But what you're going to see in the chart here is a few things. One, we were in a long-term uptrend here for a while, and we broke that. We broke that, obviously, before the invasion, but it came back and tried to hold up. And then as we got closer to the Russian invasion of Ukraine, we saw the market really sell off. But then you see these 2 days here. That was last week, Thursday, Friday, big rallies off the low, closing at the high of day both times. Yesterday actually holding up pretty well as well. And then now today, like I mentioned, we're down now 0.2% on the S&P 500. But again, it's early, a lot can happen. It's driven right now by headlines, by news stories, which makes perfect sense. I mean, that's when you have huge conflict going on involving a country that has nuclear weapons. Trying to fight against really its neighbor, its old. These all were part of USSR at one point. A lot of people are Russian in that country. I think I mentioned before, my grandfather is Ukrainian. He's no longer with us, but he's Ukrainian, was Ukrainian, and so I have Ukrainian blood in me. Obviously, my thoughts and prayers are for the people of Ukraine, for peace to come sooner rather than later. But, part of it is for me to help you with your financials as well, because we can't just stop life. We have to continue to live. And when I see situations like we're seeing today with the geopolitical conflict that's going on, I see opportunity in the market. And I talked to a bunch of my colleagues yesterday for several hours here from Stansberry Research, and a lot of us have different views on it. Some are extremely bearish. It's really concerning to them. Me, of course, I'm usually one of the most optimistic people in the group because as a long-term investor, I still see innovation winning. I still see innovation coming out above regardless of who is a leader of the country, whether it be the U.S. or Russia or Ukraine. Politics aside, it's very difficult to stop innovation. We've seen this happen for literally decades, if not history, how innovation will move forward regardless of what the powers may be, what we'll want, especially in a time like we're living today. Elon Musk is a great example, and I talk usually highly of Elon Musk, and I think he's a visionary. But what he's done with his Starlink internet satellites, putting them over Ukraine, allowing the people in Ukraine to have access and connectivity, because obviously Russia is knocking down the towers and trying to cut off all connectivity in the country, which that's what you do in war. So he was able to come in, and again, you can't stop that. This is not even a country; it's a private citizen out there stepping ahead with innovation, helping the poor souls in Ukraine to connect and try to get a country, get a hold of loved ones, etc. But again, that's innovation, folks, and that just shows you how strong innovation is. That's just one little instance that we're seeing there. So I also want to talk a little bit about the opportunity that comes here, because this is really a rare and unique opportunity. And I hope it continues to be rare, because we don't want to see wars and conflicts like this. So hopefully that's the situation for many, many years going forward. But it is kind of rare and unique. And you go back to really 1990, and that's the second half of the year, Iraq invaded Kuwait, and then it started the first Gulf War. And October 1990 is when the S&P fell by about 18% from its high a few months ago. And crude spiked at the same time as well. It was up almost 100% at one point. It was, I think, from the high teens to the mid 30s, somewhere around there, if I'm not mistaken. And but the market itself, the stock market, was back to its old highs by mid-February of 1991. So October to February, you could do that. It's November, December, January, 4 months later. So 4 months down the road, the market was back. And I've talked about this several times that historically in geopolitical situations like this, that the market usually pulls back quickly and snaps back quickly. So trying to time it is very difficult, and I wouldn't suggest doing that. And trying to sell stocks down here that you still like long term doesn't make much sense to me either, because a lot of great stocks right now are down 30, 40, 50, 60, 70% from their highs. So the time to sell was 70% ago, not today, in my opinion. Again, as long as you believe in the company long term, as long as it fits into one of the mega trends, as long as it has growth going forward, good business model, then it's fine. But if something's changed and the business completely shifted, obviously you sell. And I've always said that. But again, going back to that time, 1990, late 1990 and early 91, if you would have overreacted then, you're selling with the market down about 18%, and we haven't even pulled back 18% yet in the S&P. The Nasdaq did hit bear market territory last year for a second. Was on Thursday when it was down a little over 20% intraday. So similar pullback that we saw then. The one difference is, Iraq was the bad guy then. They weren't nearly as powerful as Russia is now, army-wise. But I got to tell you, I think Putin really effed up here, because I think his goal was to tear apart the West, tear apart NATO, when in reality, what he actually did was really bring people back together. I really think that you've seen him really, really pull the West together. You just look at Germany, look at Czech, you look at all these different countries where you see all these huge protests, even in his own country. Obviously, they shut that down pretty quickly, but he's bringing together a lot of people. He's bringing together people that don't want war, that don't want to see other people killed, and some tyrant taking over, attempting to take over another country. So I think that really backfired on him there. But the reason it's a little different is because Russia does have the nuclear capabilities. It is a powerful army, a military force, and the Ukrainian people, though, have been holding strong. So we'll see what happens. But there's reports of a 40-mile convoy going towards Kiev right now, right now, and if for some reason it falls into Russian hands, then that's probably another hit to the market. So when you're looking to buy and looking long term here, I think you have to realize that we're not out of the woods yet when it comes to this conflict, that you need to really be cognizant of that. But again, you're buying into a company you believe will be much bigger 5, 10 years from now. Along the way, whether it be tomorrow, next week, or 3 years from now, we get another situation where it's a recession or a bear market. But again, innovation, strong stocks make it through that. So I mentioned oil at an 8-year high. Let's take a look at some of these energy stocks here. But I'll pull up the oil ETF, USO. You can see it's spiking to a new high. Just last January, this was around $30, so it's up well over 100% in about 14 months. And you just look at that. I mean, it's a beautiful chart. And XLE is the big energy stock ETF. So it's got the big energy names in there: ExxonMobil, Chevron, BP, etc. See that breaking out as well, out of a little consolidation period that we have right there. So energy stocks obviously holding up really well. At the same time, we're seeing some selling in the broad market. Here's the Nasdaq right now. The Nasdaq's actually turned higher now. It's up about 0.3%, which is pretty interesting, because what we've seen recently, you can see, look at the action here. What we've seen recently is more money coming into these growth tech stocks. And it's at a time, again, where you think, okay, in risky times like this, we should be selling, right? Especially our growth stocks. But you're seeing them turn around. And I had this debate with some colleagues yesterday. And the debate is that, my side of the debate is, the market prices in the future. So the market's priced in, not the worst case scenario, but it's priced in some pretty bad scenarios. when it comes to the war, when it came to interest rates going up. We thought there was going to be a 50 basis point increase. When I say we, I mean the market thought there was going to be a 50 basis point increase in the March 15, 16 Fed meeting coming up in 2 weeks. I always thought it was going to be 25 personally, but it might have been 50. I don't know. That's kind of off the table with what's going on here. So I think 25 is now what's going to happen. We still have inflation very high, folks. With oil hitting a new 8-year high, that weighs on inflation. Russia's the number one wheat exporter in the world. Ukraine's number 5. Obviously, that is going to push up prices of wheat, which leads to higher prices for food. We have a lot of our own wheat here, so we don't really import it from there. But there's a lot of countries that rely on that. A lot of smaller, poorer countries rely on that. So, I mean, you're going to see just the inflation continue to drift around. Will it stop eventually? Yeah, it's going to stop eventually, and interest rates going higher is going to help that. But in the meantime, right here, there is ramifications that spread, and you look at all this stuff and you think, okay, the growth stocks, the riskier stocks as they are perceived, should be going lower. But again, I think that's all been priced in. All the stuff I talked about has been priced in. I don't know if it's priced in Russia completely taking over Ukraine. If that happens, hopefully it doesn't. I don't know if that has been priced in, but I think a lot of bad things I just talked about have been priced in the market, and that's why you're seeing stocks go up. If the NASDAQ closes up today, it'd be the 4th consecutive day on the upside, starting last Thursday when we gapped way down, when the heart of the potential takeover was happening. So since that time, we've been moving higher. Speaking of interest rates, this is actually really important too. I want to pull up a chart here for you really quick. This chart is of the 10-year yield. You remember it went above 2 and everybody's freaking out, pricing in these interest rate hikes. But now look at this. It's down to 1.75. It was down to 1.74 earlier this morning, and that's quite a drop. And big reason for that is people are buying treasuries. People are scared. So I'm kind of talking on both sides of my mouth here because I just said people are buying growth stocks, which I just showed you in the NASDAQ. But at the same time, I'm showing you here, people are buying into fixed income, into bonds, because as bond prices go up, you buy into them, yields do the inverse, so yields come down. So you can see the yield coming down to 1.74%, 1.75 right now, and so that shows us really where the money's going. And again, it doesn't really make that much sense because you are going from money going into the perceived riskier growth stock, at the same time money going into perceived low risk treasuries, fixed income, bonds, paying 1.75%, 10-year bond. It's not a lot. So it's really crazy what we're seeing right now. But that leads to the volatility, and that's where that volatility comes from, in my opinion. So another thing to take a look at, again, just to show where the money's flowing. So we can take a look at a Bitcoin. I'm just going to pull up the Bitcoin. Not ETF, but fund here, just to show it. But up 4.4% right now. Bitcoin, though, the price of Bitcoin was above 45,000 earlier today. It's around 44 and change right now. But again, that was like 34,000 a week and a half or so ago. So you're seeing big money come into Bitcoin and gold too. There's some money coming to gold, and I know I don't like gold, but there's money coming into it. And gold's up 0.7% today. So you're seeing really money go to a lot of weird places. Gold, you can see, okay, that's a safe haven, or it used to be. I don't think it's a very good safe haven or inflation hedge anymore. I think I'd be selling gold if I had any right here, using the rally to sell. But perceived as safe haven, treasuries perceived as safe haven, tech stocks and NASDAQ perceived as risky, the opposite. And Bitcoin, one day I think will be perceived as a safe haven, but right now still perceived as a risk asset. So very, very odd action, because you have money really going to one extreme and the other extreme. If I had to pick, obviously, I'm going to the extreme of Bitcoin and tech stocks, because I think there's so many great beaten down tech stocks right now that I don't want to be looking at gold or locking in that 10-year at 1.75%, because eventually rates will go up, and as rates go up, the price of your bond funds, your bond ETFs will go down. Again, I think it's a little late for that trade, in my opinion. That's all just in my opinion, but I think it's a little late for that trade. So another thing I want to take a look at here is, as we're speaking of Bitcoin, Ethereum, just let you know, Ethereum above 3,000, and it's pulled back a little bit, but it was above 3,000 for the first time in a while. But there's a new ETF that came out, and this is the from Grayscale, and Grayscale does a lot of great work. They have GBTC, which I just showed you, ETHE, which is Ethereum tracker, and those are funds. They're not exchange traded funds. It's not. They're structured differently. And as we all know, there's no true Bitcoin ETF yet approved here in the United States. Grayscale is doing some type of marketing push right now to try to make that happen, and I hope it does, because once it does, you're going to see a lot of them flood the market, because there's been a lot of applications over the years. And once that happens, I think it's going to be really good for the continued adoption of Bitcoin for the retail investor and even the institutional investor. I'm giving a speech in April out in Arizona to a group of RIAs, registered investment advisors, like I used to be at Penn Financial Group before I sold it, where we manage people's money. I gave a speech in Chicago to the same group. And what's fascinating is when I gave this speech in Chicago, it was middle of last year, the focus was on how to really gain exposure to cryptocurrencies, blockchain, Bitcoin, you name it. And I mean, these guys are managing billions of dollars, and most of them had no clue how to gain exposure, but their clients want to start getting exposure, which is normal. You're seeing it from a lot of people from all levels of income. And once we have a Bitcoin ETF out there, that's going to be really important, in my opinion, because you'll be able to see exactly how easy it is and how much money really, once they get into Bitcoin and other cryptocurrencies, but don't want to separate and have to go open up a Coinbase account or a Robinhood account or buy it through Square. They don't want to do that extra step. But if they could buy it in their Fidelity account in the normal ETF or their TD Ameritrade account, much easier. And that ease of use, that ease of doing something will attract a lot more money, which again, I think really pushes up another catalyst to the price of Bitcoin, because demand will increase while supply is barely increasing at this point, with 19 of the 21 million already mined out there. So that's something to keep an eye on. And I think that this year there's a good chance it will gain approval. But what I want to look at here, though, is GFOF. And this is a newer ETF. Came out first trading day of February. This is the Grayscale Future Finance ETF. But basically what it is, it's a basket of a lot of companies with exposure to cryptocurrencies. So I took a look at it here for you, and some of the biggest holdings include Coinbase, which is the big, obviously, brokerage firm, which went public not too long ago. Robinhood, similar, it's a brokerage firm. PayPal is in there. Square is in there. Both fintech payment companies, but they accept Bitcoin. You'll have to buy Bitcoin on through their platforms. Canaan, CAN, which is a related company. Hive related company. Hut 8 related company. So it's a pretty diverse, but it's really, really going to be driven, the ups and downs of this, by Bitcoin. So let's take a look at a couple of the big names. But first, here's GFOF. You can see there's not much action in it because it is newly traded. Today it's got traded about 17,000 shares early on, but yesterday all day it only did 10,000 shares. You're not seeing a lot of volume and money coming into it yet, but I think it's a nice way for people to get exposure to the general sector. But as you know, my view typically in ETFs is I'm not a huge fan of them and anymore. I used to be a big fan of them, and I think there's still a place for them for certain types of investors. But if you're a do-it-yourselfer these days, it doesn't cost you anything to buy and sell. Back in the day, it could have been anywhere from $7.99 to $30. So if you're buying and selling a lot of stocks, that adds up very quickly, especially if you don't playing with a large amount of money. Where now there's no commissions to buy or sell, so you can have as many buys and sells as you want, buy as many stocks as you want, and the commissions won't eat you alive. And that's what's really changed with me, and that's why ETFs were good in the past, because they gave you instant diversification. Also, ETFs charge a management fee, just like a mutual fund. A lot of them have gotten much lower. Like the Spiders, the SPY is like less than 10 basis points, I think, 7 or 8 basis points, I don't remember, but super, super low. But some of the niche ones that are really looking at specific sectors, they can still be pretty high, upwards of 1%. So you're paying that 1%, that's eats away at your gain during the year. So why not build your own? And that's what we do. For my subscribers, I'll build a basket that goes after a certain megatrend. So you look at GFOF, and what you can do here is just you pick your favorites out of it. Okay, I'm going to have exposure to these 5 stocks I would have put $5,000 in the GFOF. I'll put 1,000 in each. I was going to put 500 in GFOF, but I'm going to put 100 in these 5 stocks. So you're still getting at $500, still getting exposure. You're still getting diversification, and you're not paying the management fee. You're not paying any trading commissions. All 500 goes in there, but you can do it with the 5 you like and not get the other junk that's in there. So let's take a look at Coinbase here first. That's the largest holding in GFOF. And you see, went public here back in April, and man, oh man, up above $420. Came all the way down in 150s just last week, and it's back up. It was above 200 today for the first time in about 2 weeks. The low of the day right now. I like Coinbase long term. It's clearly the leader when it comes to the average retail person investing in cryptocurrencies. So I think it's got a real nice future, but this will go the way of Bitcoin, in my opinion. As goes Bitcoin, so goes the altcoins, so goes the related stocks. It's very similar to gold. When it comes to gold, the gold miners and gold related stocks and precious metal related stocks will do well when the price of gold goes up. It makes perfect sense. So Coinbase, as you can see here, kind of going sideways, but this is one actually I do like it long term. Again, nothing here, buy or sell recommendation. It's just me, sharing information, do your own homework. Robinhood, on the other hand, I never liked Robinhood. I thought this was going to be a dog from day one. And after going public in July, opened in the mid 30s, ran up to above nearly $90. Now we're down to 12 and almost broke below $10 here just last week. It might have actually, hit 993. So it went down to single digits at one point for a short term on Thursday. But back to $12, so it's rallied 20% off that low. I just don't like it. I think they lost a lot of credibility in the way that they're clearing their trades. I'm happy for what they did for the industry, because by them offering free trading, it forced the big guys, Schwab, TD, Fidelity, all the big guys to then also offer free trading. So that was great. The problem is, now that they also offer free trading, that do you really need Robinhood anymore? But the younger generation still likes it. You can buy some cryptocurrencies on there, so that is one difference, and that's why they're in the ETF. That's why it's a top 5 holding. But again, I think you're going to start seeing an expansion of the ease of use of buying, and I just don't see it. There's a lot of reasons I don't like it. I just don't see it. PayPal, they have their Venmo. And that's amazing. It's so easy just to pay people. Boom, boom, boom. I use it all the time. But this stock has been decimated, folks. From above $300 in July, fell below $100 on Thursday. Down about 2.8% here. I think it's a great buy down here. I mean, I still think this easily is a $200 stock, and even at $200, still well off the high that it was just in July. I think at some point this gets back to the high, which is really a triple from here. Huge upside. So if you see 3x on the upside, $120 to the upside, I think your downside is probably about 20 or $30. That's a nice ratio. 220 to the upside to about 20 or 30 on downside. That's a huge, huge ratio in your favor. So I like PayPal here. Again, no buy or sell recommendations, but I think it's just it lost some of its eBay business, but it's going to get other business to fill the spot. And again, I'll play secondary play on cryptocurrencies at the same time. It's a smaller one. This is a Hut 8 mining company, and you think mining, you think gold, silver, nickel, whatever. But this actually it's a Bitcoin miner, and the Bitcoin miners, as you can see, Bitcoin topped up here just below 70,000, and the stock was above $16, fell down below 5. Now it's at 6. These are very risky leverage ways to gain exposure to cryptocurrencies and Bitcoin specifically. Because if Bitcoin goes back to 69,000 new high, I still think it hits 6 figures. I think it's 100,000 at some point in the near future, next 12 to 18 months, tops, probably 12 months, I think it happens. If that happens, when it happens, stock like this will be well above its past all-time high. So that's, but again, it's a leverage play. It's a very, very, because if Bitcoin goes from 45,000 or so now to 100,000, it's only going up 10%. Where if this goes back to its old high, it has to go up 2.5x. And then if Bitcoin goes 100 grand, this is probably a 4 or 5x. But on the downside, you can see what happens when Bitcoin pulls back. Bitcoin pulls back 40, 50%, this pulls back much more. So again, higher reward, higher risk ways to play it. The big ones are Riot blockchain, Marathon. Those are the two biggest out there as far as Bitcoin miners. There's a lot of ways to play it now. Again, this ETF, if you want to go through it, go through the ETF. It's GFOF, and it's a good way to kind of look at stocks and build your own little portfolio. And for subscribers, we've already recommended a couple plays. We just put some out last week, as a matter of fact, two Bitcoin-related stocks, both doing well. We just both put those out, brand new buys last week, because I think there's a great opportunity down here for a lot of stocks. All right, so let's take a look at the market one more time before we wrap it up. Take a look at the S&P 500 here. Now down about 9/10, so low today. We're drifting lower. Let's take a look at the VIX. This measures the fear. Let's see what's going on out there. You can see it's still elevated. It's around 3150, so it's near high elevated areas, showing me that there's still a lot of fear out there. And I think you're seeing that, as I mentioned, with the rush into treasuries. People are scared. I don't know if this was a low, if today is a low that we're going to see here. I will tell you, though, that I do believe that we are very, very close to a bottom, if not at a bottom. And I think there's a good sweet spot here for some long-term investing. So I want to thank everybody so much for watching. I hope you have a good rest of the week. We'll be back Thursday, a little different location on Thursday, doing some fun stuff. The team's coming down. Hopefully have our studio set up soon. Watching. That was Making Money, and I'm Matt McCall.
On this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.